Welcome to part 2 of AMP Capital's Advisor Education Series, where a financial planner asks AMP Capital about how its new active exchange traded managed fund actually works and benefits clients. Here's Anthony Poole and Nada Naimi.
What does that fund actually invest into?
It's a global multi-asset portfolio, so it invests across equities, commodities, currencies, and fixed income, and also global real estate. So in a sense, there could be up to 80 active positions in the portfolio at any time, which are managed by the team. And we are quite excited to give access to all those positions around the world in one single trade to our local investors in Australia. We usually look for markets which are cheap, for which the fundamental news or macro backdrop is becoming less bad. And that's the difference, because we don't wait for news to become good. Because when news is good and everyone's happy, then it's already priced in, it's too late. So we look for markets which are unloved and cheap, and where the news is becoming less bad. We don't buy individual stocks. So if you buy a very cheap company, the company can go bankrupt and you could lose your money. Whereas our position is across markets, so we buy the entire sector or entire country in terms of index futures or using ETFs.
How does the dynamic asset allocation strategy work?
First of all, there's a strong process backing it, and that process has been used for many years. And we have weekly asset allocation meetings that includes Shane and myself and various teams across AMP Capital. We'll look at our indicators and process, talk about the world, then make a decision around the asset allocation. But the process is there to switch off emotional decision making. But there are times in the world that you just want to protect the fund against a potential event risk, like we have right now, the election, US election. At the short term, very, very short term, there's a lot of noise and it's unpredictable. Markets just move in reaction to what central bank has said. We're not targeting that very short term, so we're not really day trading the portfolio. Our investment time horizon is 5 years.
How do you manage risk within the portfolio?
We have started to use more option protection in the portfolio because you have, as a diversification, you have a list of growth and defensive assets. The defensive part of the market is becoming increasingly expensive. Our philosophy is not to hold any expensive asset. So to provide that diversification and limiting downside drawdowns, we are using more and more option protection to protect the fund against adverse market moves.
How would DMKT actually benefit an advisor and a client?
Investors or advisors spend a lot of time picking managers or picking stocks. So stock selection alpha is something that we are used to, most people do. What we don't do enough of is gaining access or using asset allocation as a source of value add. Deep market is a market selection portfolio, and we believe combining our asset allocation market selection expertise with security selection, manager selection portfolios will provide a great outcome for our investors.
Thanks for tuning in to AMP Capital's Advisor Education Series. Be sure to check out part 3 next week, where we'll explore how the fund capitalises on emerging market opportunities.